So, hello. Massive hello to everybody. Hope everybody's having a great day. 50 pips, rocking and rolling here. 31st of May, 2025. No trade calls, no recommendations, or responsible on stuff here for educational purpose only. So, I thought we'd take a little bit of a technical look at NVIDIA and see what's going on here. Could be some interesting points to highlight. So, basically, we're kind of here hovering at these highs. Now, what is interesting is despite, if you think about it, the last 12 months, the AI boom, all the earnings we've had from NVIDIA, everybody very, very positive, sky's the limit, massive demand, et cetera, et cetera. What's interesting is that if you look at where we're trading, essentially we're pretty much around this 140 level, which is where we were trading pretty much a year ago. So interestingly enough, in a whole year with all the talk about AI and everything, we haven't really gone anywhere, right? So the other thing, which is also interesting to point out, is again, despite all this hype, this is actually the reaction post earnings. We always talk about the fact that it's not how we trade on earnings, how we open, it's how we close and what the kind of follow through is on the day and on the week. And you can see we couldn't hold the earnings pump. Now, this is not the first time, here we've gone through basically this year where we're hovering here with the pump continuing. Basically, this is the fourth earnings where we couldn't really get any upside traction, right? So the big question is, does everybody who wants to be long already have their positions on, and it's there's just no more buyers at highs, right? And that's the key thing. Usually when things get very exhausted at highs, they don't fail because you get massive sellers. A lot of times they just fail because there's an absence of buyers, right? So that's something to keep in mind here. Now, so looking at what's happening here, well, you've got a situation where we had this attempt to come back down, downside channel, we broke higher, and we're trying to hold that breakout, right? There's a lot of ways you can look at it. I'm not a huge fan of trend lines because you can draw them whatever way you want. But basically, this is that breakout. You see the move back it's holding, and it's trying to extend. So what does that mean? The way I'd be looking at it here, instead of being super bullish or super bearish, is saying this is still stuck in a range, right? And this is kind of the discussion we've been having on equities. I'll try and do a live YouTube stream so we can discuss this. But basically, you could look at it at a broad range, which is kind of like 140, 150-ish, and this 95 to the downside, where we haven't really gone anywhere, right? And I suspect unless we get real resolution from from Washington, D.C., tariffs, yada, 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 we're likely going to continue to trade inside this range. So I'd be looking at it as a range trade, right? Basically, a lot of stuff to do inside this range, but broadly speaking, neutral, much to do about nothing as long as we stay inside this range. Super bearish if we trade to the downside, and super bullish if we look to the upside. Now, looking at, if you try and slap some moving averages on here, a lot of people like to use these. I would say, the point of moving averages is really to look at the trend. And here, when you've got a situation where all these moving averages are kind of, flatlining, going sideways, they become less and less important. So I wouldn't use them as technical references. What I would look at as a technical reference, if you want short term, is the 10-day moving average. That could give us clues. But essentially here, the way I'd be looking at this, it's really important for the bulls to hold this breakout, right? And essentially to show up here, 126 into 135 and continue to bid it up. And as long as the bulls can hold this, well, then it could, it's dangerously close to those highs, new highs are bullish. And this is really going to be the key. But if we can't hold this quick, and especially if going into the week, we start to see daily closes below the 10-day moving average, my base case would be that at the very least, we'd have a very quick test of the 125. And then keep in mind that you've got a lot of poor structure here with a lot of gaps. So if we lose 125, my base case would be we'll just slap that broader range back on and expect it to come all the way back to the bottom of the range, below very bearish, above very, very bullish. Now, keep in mind that it's kind of like the dynamic we saw in silver a while ago, is flip this to a monthly and look at this, right? Look at these monthly candles. Look at these wicks. As much as you want for sale here, can't get a monthly close above the 140, and here yet another month we close back below. So it's really hard to get bullish. To me, this is like trying to get long into a brick wall. However, if the brick wall breaks, then this could really fly. In terms of upside targets, what I would look at is there are a couple of different moves. But basically, I would expect 170 into 190, right? There's a lot of different ways to look at it, and when you're going to new highs, it's tricky to look at targets. But one thing which I would look at is potentially, the 123, 150 extension of this move here from A to B. And you can look at those targets to the upside. And I wouldn't even look at the 123 extension, because basically, keep in mind, this is a kind of top that's been forming for a year. If we take out those highs, this should be super bullish. I would expect us to go straight through the 123 extension. I'd be looking at the 150, 161 extension. But more importantly, if you also look at this from a bigger picture, so think about it in terms of a monthly, you could look at, since those uber lows, we've got back down all the way into those highs that we just printed, basically those lows from 2017, 2020. Basically, you can see this is a big retracement, and all the upside targets are pointing much, much higher. So I think even though it makes sense to look at it as a range trade, and I'll be looking to tactically trade it to the short side, there is no way you want to be short if we break this, right? If we break that, I think, you're looking at minimum 170s, possibly all the way into the 190s. Keep in mind, when these tops have been, so much offers there, it's kind of like that ball underwater, keeping it below that. If we break through, it's very, very brutal to the upside. So again, I think there's some interesting dynamics going on here. I think there's plenty of trading to be done in this range, but I saw a lot of people getting super bearish and super bullish. So I thought it'd be interesting to try and show you the way I'm looking at it, to try and think about it a little bit more neutrally in terms of range, and just don't be confused by velocity of move inside range or by headlines. It's just a big range. And keep in mind, especially the longer we stay in these sideways ranges, they're very tradable and they're very interesting, and they're also very much easier to risk manage in terms of sizing, as long as that range holds. But again, those are the levels I would be looking at. That's how I'm framing it. I hope this was useful. Let me know if you like these videos. All the best, guys. Take care. Bye-bye.